Chapter 2, Managerial Accounting. In Chapter 2, we're going to start talking about cost term, concepts, and some cost classification. The first thing that I want you to understand is, as you see from the value chain, we converting nothing into the product. The question is, what do we need to have a product? And we always, for every product, in order to make a product, we need three things. First, we need the material. Second, we need the labor or somebody to work on that material. And third, we need that manufacturing overhead or some place where we can work on that material in order to become a product. So we need direct material, we need direct labor, and we need some indirect things which gonna convert the material into the product. Let's see what's the direct material. Direct material is any raw material which is become a integral part of the product and can be easily traced directly to the product. Labor, on the other hand, will be any cost which is associated with somebody who work on the material to convert that material into the product, and also can be easily traced. The last thing that left is manufacturing overhead. The tricky part with the manufacturing overhead compared to direct material, direct labor, since direct material directly and easily can be traced to the product, direct labor easily and directly can be traced to the product, the manufacturing overhead, on the other hand, cannot be easily traced directly to the product. So for that reason, in manufacturing overhead, we're going to have indirect material, we're going to have indirect labor, and we're going to have all other indirect costs which are related to the product, but cannot be easily directly traced to the product. The interesting thing is those three costs, those are called product costs. Those three costs, they always come in this particular order. First always comes the material. Second comes the labor. And the third comes any other cost, indirect costs, which cannot be directly traced to the product. For example, let's see, we're starting the company. We want to produce cell phones. We're hiring 5 people. But we don't have the material. Is it possible those 5 people, if we lock them in the room and open the room after 1 week, they to produce cell phones? Obviously not. So that's why first we need the material, and then we need the people to work on that material. Since direct material and direct labor comes first, they are called prime cost. Prime means first from Latin. So direct material comes first, then direct labor comes and start working on the material. Then it comes manufacturing overhead. Now, direct labor and the manufacturing overhead is the one that converting that raw material into the product. If we don't have direct labor and we don't have that additional indirect cost, we won't be able to convert the raw material into the product. For that reason, direct labor and manufacturing overhead are called conversion cost, because they're converting the raw material into a product. The question comes, how are we going to treat the overtime? Well, overtime we'll consider to be part of the manufacturing cost. And we're going to treat it directly as a direct labor. It's going to be part of the direct labor. Now, we found out that we have the product cost or manufacturing cost. What we're going to do with is there any cost which is not related to manufacturing? Yes, there is. Which are those costs? Those are costs on non-manufacturing cost. For the non-manufacturing costs, we have marketing and selling cost, which are not related to the product directly in the production of the product, on the manufacturing of the product, but are related to selling the product, advertising the product. And we have that administrative cost. Why? Because we still have to pay the owner. We still have to pay the accountant. We still have to pay the clerk, the office assistant who pick up the phone. Is she related to the production of the product? No. But is she part of the company? Yes, she is. So that's for that reason we have two types of costs. One is called product cost, which product cost again is direct material, direct labor, manufacturing cost, manufacturing overhead. And then we have a period cost, which period cost including the selling cost and selling administrative cost, which are non-manufacturing cost. So what's the difference? The difference is that the product cost, we're going to keep it on the balance sheet as an inventory first. That will become our finished goods. We're going to keep it on the inventory until we sell it. Once we sell it, it's going to become cost of goods sold. And it's going to move from the balance sheet into the income statement. But for the time being, we're going to keep it on the inventory. That's why sometimes the product cost is called inventorable cost. Why? Because it's not directly expensed. Where the period cost, which including that selling and administrative cost, are directly expensed. That's why they call it period cost. And since you know that income statement is prepared for the period of time, since that cost directly go to the income statement, that's what they call it period cost. Now, coming the one question here for you, which of the following costs will be considered period rather than product in the manufacturing company? Now, when you have to answer those questions, every time when you see manufacturing, every time when you see production, every time when you see something related to the product, that's product cost. Every time when you sense that, hey, this is something else that's not related to the manufacturing, that's not related to the product facility, that's not related to any way to the product, that's period cost. So let's go one after another. First one, manufacturing equipment depreciation. What kind of cost do you think that is? Is it going to be product cost or is it going to be period cost? Product cost. If it's product cost, now we have three options. Going to be direct material, direct labor, or manufacturing overhead. What do you think manufacturing equipment depreciation will be? Is it going to be easily traceable to the product or not easily traceable to the product? If it's not easily traceable to the product, that means it's manufacturing overhead. If it's easily traceable, then we have to decide what is it. Is it a raw material or is it labor? So yes, it's a product cost, but what do you think? What kind of cost is it? Out of the three options that you have, direct material, direct labor, manufacturing overhead. Any suggestions? Direct material. It's a depreciation, people. Can we easily trace depreciation to the product? Is depreciation integral part of the product? What do you think? Where on the product can see depreciation? Imagine this, I'm making bread. But I have to use the bread maker, which bread maker, every time when I use it, he depreciates. Is depreciation of the bread maker direct material? Obviously, it's part of the product cost, but is it direct material or is something else? What do you think? It's a manufacturing overhead, yes, absolutely. So the manufacturing equipment depreciation will be what kind of product cost? What do you think? Conversion cost, definitely. It's a product cost, definitely. But what kind of conversion cost? Because we have two conversion costs. We have direct labor and the manufacturing overhead. Which one of those will be? What do you think? Manufacturing overhead. Yes, it is manufacturing overhead. Yes, you're correct. All right, so let's see the next one. Property taxes on the corporate headquarters. What kind of cost will be that? Product cost or period cost? Definitely period cost, yes. Direct material cost. What kind of cost will be that? Product cost or the period cost? Product cost. This is clearly direct material. How about the electrical cost for the light, the production of the production facility? It's a product cost, but what kind of product cost is it? Is direct material, direct labor, or manufacturing overhead? Manufacturing overhead. Yes, that's correct. How about the sales commissions for the salespeople? What kind of cost will be that? That's period cost. Yes, absolutely correct. So, what is the period cost? Property taxes at the headquarters and salesperson. Now, in North America, we have two types of companies. Actually, we have three types of company. Here, it's incorrect. There are three types of company. One company is sales company. Sorry, service company. Service company is the first type of company that we have. Second type of the company is the merchandiser. What the merchandising doing? So, obviously, service company, what they're doing, they're just providing services, nothing more, nothing less. Douglas College, what they're doing? What we're doing in Douglas College, we're providing service. That's a service company, out of question. Then we have a merchandiser company. Merchandising, we have two types of merchandisers in North America. One is the wholesale, the other one is retailer. The wholesaler can sell to another wholesaler or to a retailer. The retailer sells to the individuals. What they selling? Well, they selling only whatever they buy. Make sense? If they buy computers, they can sell computers. But if they buy computers, they cannot sell cell phones. Why? Because they don't have it. Make sense? So the merchandisers buy something, sell exactly the same thing. Buy computer, sell computer. Buy cell phone, sell cell phone. Buy cars, sell cars. Manufacturer, that's a different story. Manufacturer, what he's doing is he's buying the raw materials and then producing and selling finished goods. For that reason, we're going to have a different kind of vibe in the cost of goods sold here. So first, for the assets, for the inventory, on the merchandising company, we're going to have only one inventory account, which is called merchandising inventory. Whatever you buy, that's what you're selling. In the meantime, we're going to keep it in the account called merchandising inventory. Where in the manufacturing company, we're going to have 3 inventory accounts. First one will be inventory raw material. Then we're going to have a work in process, something in the middle, which is not raw material, but it's not a product yet. And the last thing that we're going to have is the finished goods. Rodrigo asked me to repeat the 3 companies, 3 type of companies. First one is the service company. Service company, they don't buy inventory, they're not selling inventory. They're providing services, primarily. Second one is the merchandising company. Merchandising company buy something, sell something. Buy inventory, sells inventory. And the last thing is manufacturer, company who actually producing finished goods by buying first raw materials, then working on the on the raw materials and producing the finished goods. And after that, selling the finished goods. So those 3 inventory accounts for the manufacturing company. In the raw material will be just the raw material. That will be pure inventory accounts. From the raw material, we're going to take it and we're going to put it in the working process. And once work is done, once we have, okay, we finish this is a complete product, we can move it from the working process into the finished goods. And now that finished good is ready to be sold. And that's where we're going to stop for today. So what we cover the product cost, we cover the period cost, we cover the 3 type of companies, and next time we're going to continue with the inventory and how the inventory flows, and we're going to see other things next time. Thank you for today. Enjoy the rest of your evening. Have a wonderful weekend, and we're going to hear each other next week. If you have questions, please stay after the lecture.